Friends, this is a class 7 of holding company, and also this problem is very important. It contains some specific adjustment like your cash in transit and proposed dividend. So I hope that you have gone through the question. If you have not gone through the question, please note it down and start doing the problem with me. Definitely you will understand the problem very thoroughly. Friends, as per the question, they have given you that is your A hold 800 shares in B Limited. In B Limited, the share capital is 1 lakh and 1 lakh of 100 each. So if you divide 1 lakh by 100, the total number of shares in B Limited is 1000. The total number of shares in B Limited is 1000, and out of that 800 shares are held by your holding company A Limited. Therefore, the degree of holding 800 by 1000, 80%, and obviously the minority is 20%. Then we will come to pre and post acquisition period. Friends, the date of acquisition is 30/6/2022 and the balance sheet date as given to you is 31/12/22. So from 1/1/22 to 36/22, 6 months. 6 months is the pre-acquisition period and 6 months is the post-acquisition period. Then we will take on the reserve. Reserve as per the question, reserve is given as on 1/1/2022, 8000, and 31/12/22, it is 10,000. Friend, 8,000 to 10,000, there is a increase of 2,000 over the year. Out of 2,000, 6 months, for 6 months it is 1,000, and for this 6 month post acquisition period it is again 1,000. So if we calculate reserve as on 30/6/2022, reserve on this date of acquisition, it will be 8,000 plus 1,000, total will be 9,000, right? Similarly, PL was 6,000 at the beginning of the year. At the end of the year, PL is 12,000. So increase of profit during the year, 12,000 minus 6,000. So increase is 6,000. And if we take 6 month increase in profit, it is 3,000. And post acquisition period increase, it is again 3,000. Again I am telling you, the PL balance is 6,000, closing balance 12,000. It will give you the 6,000 increase, and for 6 months it will be 3,000, that is 50%, and post acquisition it is also 50%. So friends, 3,000, 3,000. Now pre-acquisition is 18,000 and post-acquisition is 4,000. Now if we deduct minority interest, that is 20%, 18,000 minus 20%, that is your 3600. Post acquisition period, it is again 20%, 800. So holding company share is 14,400 and 3,200. Right? Now this is our note 2. Then we will come to your second statement, that is your analysis. In the analysis of profit, reserve is 8,000 because it is beginning, and transfer for mid-term acquisition. Out of this 2,000, 1,000 is pre-acquisition, 1,000 is post-acquisition. Similarly, PL 6,000 is the opening balance. Then 3,000 plus again 3,000. During the year, profit is 6,000 and pre-acquisition 3,000 and post-acquisition 3,000. So total is 18 and 4. Minority interest 3,600 and 800. So holding company share will be 14,400 and 3,200. So this is our analysis of profit statement 1. Let us come to the statement 2, that is your cost of control. The cost of investment, it is given in the asset side of the balance sheet of A Limited, that is 92,000. Equity share held by A Limited, that is your 800 share of 100 each. So 800 into 100, it will give you 80%, that is 80,000. Now share of capital profit, it is 14,400, 94,400. So it is a capital reserve. Capital, that is capital reserve, the negative is a capital reserve. It will come in the balance sheet of consolidated balance sheet. In the consolidated balance sheet. Let us come to minority interest. Share capital is 1 lakh. If you take the 20%, it will come to 20,000. Share of capital profit, that is for your 3,600 for minority and for revenue profit 800. Friends, जो प्री एक्विजिशन प्रॉफिट 3,600 is the capital profit and post acquisition profit 800 is the revenue profit. So minority interest comes to 24,400. It will come in the liability side of the balance sheet as the last item. Then we shall go for the holding company PL reserve, capital reserve and the balance sheet. Friends, this is the fourth statement of holding company reserve and surplus. And if you see, this is a capital reserve. I have shortly written here, please write capital reserve. This is reserve and this is your PL. We will take at first, we shall take the balance as per the balance sheet of holding company A Limited. In the A Limited, the reserve is 18,000 and PL is 16,000 as per PL balance sheet. Then capital reserve on consolidation, this is your statement 2, that is 2,400. Then share of revenue profit. Revenue profit, this is from the analysis of profit 3,200. Interest not accounted for, this I will come to you. This is 500. So total is 19,700, 18,000 and 2,400. So far as the unrealized profit is concerned, please refer the adjustment number 6 included in current asset rupees. Adjustment number 5. A limited stock include 4,400 which profit is 400 thereon, that is profit they have already given you. Out of 4,400 stock, the profit is 400. We will take 400 into 80%, that is your holding company share. This is 320. So if we deduct 320, it comes to 19,380. So after preparing this fourth statement, we will go to the consolidated balance sheet. First we are preparing for your liability. You can prepare the details in the note and give the note number here and the final amount here. So equity share capital 1,30,000. This is the equity share of holding company, that is A Limited. Reserve, capital reserve and statement of PL, we have taken all these things from here. We have taken this from here, and current liability, just add the both minority interest, we got it from the third statement. So total liability side is 2,06,180. Friends, so far as the cash in transit and interest of 500 is concerned, let me explain you. There are two important points, the new point here. One is your included in current account of A Limited, the amount of 500 being interest credited to A. The interest has not been considered in the books of A Limited. Here they are telling current account with A, that is maintained by B. You can see at the liability side of balance sheet. Balance sheet में in case of B Limited, you can see current account with B. It is written as 7,000. So within this 7,000, interest of 500 is here. That means entry passed by B Limited is interest account debit. This is the journal passed by B Limited. Interest is there, expenditure. This interest is payable to holding company A Limited. So interest account debit 500 to current account with A. Current account with A, that is 500. So in 7,500 is here, but this interest has not been taken into account in the books of A. So if you see the A Limited asset side, this is liability side, the A Limited asset side, here current account with B 7,500, current account with B, this is asset, B Limited 7,500. Now this is the entry passed. entry passed in the books of B Limited. Now A Limited has not taken this 500 interest in the profit and loss account of profit and loss account. So if they will consider the interest, what will have entry they will pass? So A Limited will pass current account with B Limited debit 500 to interest account. Now they should tell to PL account, this is your 500. Here also they have already passed the entry interest. This is yet to be passed. So this is the entry they are required to pass. Therefore, in the fourth statement, we have added in the PL rupees 500. We have added here. Here also 500 to be added because this is asset, this is debit. Therefore, the balance will be after the entry. The balance will be 8,000. 7,500 was there plus 500 the entry. This is the debit. So the balance is 8,000. Here the balance is 7,000. Therefore, friend, this 500 we have taken it as a interest in the holding company PL and reserve, that is statement 4. And another 500 we have taken it to the current account with B Limited. After debiting this current account, the current account balance will be 8,000. Here the balance is 7,000. Both the current accounts should be tallied. Here also another one adjustment is here, that is cash in transit 7 adjustment. Cash in transit from B Limited to A Limited was 1,000. So B Limited has sent rupees 1,000 to A. If A will pass the entry, now A will pass the entry for cash in transit. So the cash will be coming to the books of A. Therefore, in the books of A, this entry will be passed. Cash in transit account debit. To cash in transit account debit to your current account with B Limited. It comes to 1,000. Friends, after passing this entry, if we pass this entry, then the current account with B Limited will be reduced by 1,000. So after this entry, 8,000 minus 1,000, current account will be 7,000. Here also current account is 7,000. So after passing this entry, the current account with B will be 7,000. Right? This 7,000 is a debit. This 7,000 is a credit. This debit and credit will be cancelled. Therefore, we have not taken the current account here. Second one is your proposed dividend. As I have told you, as per Companies Act 2013, Schedule 3, your proposed dividend, if given in adjustment, just ignore that and give a note to at the end of the balance sheet, that is sufficient. And the note you can write it as per Companies Act 2013 Schedule 3, the proposed dividend, if it is not sanctioned by the AGM, approved by the AGM, it is not a liability, therefore it is not to be treated in the accounts. Right? So this finishes our liability side, and this current account with A and current account with B, after all adjustment it will be 7,000. This will be cancelled. Right? So let us come to the asset side of the balance sheet. You will continue the asset side below here. I am writing the assets, just continuing that one. This is your note number, details, amount. This is your assets. First we will write the tangible asset. Under this fixed asset. And so far as the fixed asset is concerned, we will take 36,000 A Limited, 36,000 B Limited, 87,000. Total comes to 1,23,000. Then we are coming to your stock in trade, 12,000 and 15,000. That is your current asset. Investment will not come. A Limited 12,000 and B Limited 15,000. 12,000, B Limited, it is 15,000. Friends, total 27,000 less unrealized profit. Unrealized profit 320, it will come to 26,680. Then we are coming to your data. Data is 18,000 and 16,000. Data A Limited 18,000, B Limited 16,000, total 34,000. Then we will come to the cash, that is cash and cash equivalent. A Limited 5,500, B Limited cash is your 16,000. Then cash in transit 1,000, total 22,500. So let us make a total here. 1,23,000 plus 2,60,000 6,180. The liability also 2,06,180. The liability also 2,06,180. Asset also 2,06,180. Friends, in this particular problem, you just go through the cash in transit and how to balance the current account of both holding and subsidiary. Both in case of current account, you will see definitely goods in transit or cash in transit, or some missing item like interest will be there, and after definitely on consolidation both the current account debit and credit will be same and cancelled. This is very important. As I have told you in the last class, out of the 6 adjustments, I had given the selected adjustment, that is cash in transit, and other adjustments, important adjustment for exam. So please see that how we have considered the adjustment for current account in this problem. So if you like the video, please subscribe and offer your comments. We will come out with, so this finishes our suggestion part from and we will continue with more problems on holding company. But I am sure if you go through all these 7 video, and first one was introduction. If you go through this 7 video, definitely all the adjustment in the exam will surely be common. Maybe there will be figure change and variety also will be common, and problem will be easier for you. Thanking you and wishing you the best of luck. Let us meet you in the next class.